going on, my stock market bulls and bears? I'm your host Terry, and welcome to the channel Buy the Dip. Guys, in today's video, I wanted to get in here and go over 5 reasons that you should not have to worry about another stock market crash. So this article here is published by the Motley Fool, and I think it's a very good read. So we're going to go over the 5 reasons not to worry if your stock right now is not performing well. And we're going to kind of go over this here. It says 5 reasons not to worry about another stock market crash. And short-term speculators have every reason to fear about a stock market crash, but true investors should embrace it. Man, that is true right there. That is a very true statement. If you're a short-term investor, yes, you need to worry. But if you're in this for long-term, like you're talking 2 years, 5 years, and 10 years, then you honestly have nothing to worry about because the stock market always goes up. It always does. It's just always the way it's always the way it is. If you're invested in good quality companies that have a good business model, good management, and a great future for potential growth, it's 3 key things, man. If your company has that, then you're going to look good. So here you can see this was published by Robin Hartill on today, actually, in the morning, 6:16 in the morning. So this is a brand new article, and I think we need to go over it here today. And it says another stock market crash is coming. That's not hyperbole. Stock market crashes are predictable. Since 1950, the S&P 500 has crashed or at least lost 10% of its value on 38 occasions, once every 1.84 years, so you can be pretty sure it'll happen again. The unpredictable part of the stock market crash is the timing. It is impossible to know when the stock market will tank or a long bear market will last. But how, regardless of when it happens, a market crash isn't coming to lose sleep over. Here's why you shouldn't panic the next time the market plummets. So this here is basically showing you, man, don't get yourself worried if your stock isn't doing good, because 5 things you always need to keep in mind when you're investing in the stock market. And I think this article, honestly, I agree with all 5 of the reasons. And guys, I tell you this all the time on my channel right here, this number 1 right here, and I say this for all my LCA people because that stock is getting beaten up. Number 1 in the stock market, you only lose if you sell. So technically your net worth rises and falls with the stock market, but you only lose money if you sell at a loss. As long as you're invested with a time horizon of 5 years or more, meaning you haven't put money in the stock market that you'll need in at least 5 years, there's no reason to worry. Your investments have plenty of time to recover. How much of your portfolio is worth at any given day doesn't matter. It's a long-term performance that counts. Don't cash out while everyone else is panicking. You'll just be fine. That right there for me is 100% where I'm at with it. I am not selling my LCA stock, and honestly, I don't care if it drops down to $11 or $10, guys, because if it does, I'm just going to buy more. I'm just going to keep buying more. So don't worry, don't panic, and yeah, you'll be good to go. So key point number 2. The best days of the stock market are often that follows the worst ones. So if accurately timing the market were possible, of course everyone would do it. But those who lack psychic powers, the best strategy play is to stay put in the stock market. Known history tells us some great days are ahead. At JP Morgan Analysis found that 6 of the 10 best days of the S&P 500 index between 1999 and 2018 occurred within 2 weeks of the 10 worst days. The high cost when you're not invested for those good days. Missing 10 best days of the market over 30 years would reduce annual returns of a $10,000 investment from 5.62% to 2.1%, reducing the portfolio's value by half. So they're basically saying, man, if your money is not in the stock market during these crashes, because a lot of time I kind of feel we're at somewhat of a crash right now, because there is a lot of stocks that is down really bad right now. But if that is the case, we're going to shoot up, man. We're going to shoot up. And I believe it's a matter of, number 1, for me, I think, is getting this stimulus check out. And number 2, is the presidential election. Once these two key things are done, I think the stock market's going to have a big V-shaped recovery, and we're going to see some great growth and gains in the stock market. And here's number 3 of 5 on the list, guys. It is an opportunity to buy more, which, yes, I said I don't care if my stocks go down or up. I'm going to keep buying more. So, yeah, if this baby goes down more, like my LCA, I'm going to buy more. And right now, I'm currently in Apple, and I purchased Apple at like $123 a share. So right now, Apple's down like 115, 114. So it's getting to that point where I may need to purchase more shares of Apple right now and add some more to my portfolio because they're down like $8 from when I purchased it. So that's a pretty good, I think it was around like 5%, roughly like 3 or 4%, 5% down right now. So even Apple's down, guys, not just, a lot of stocks, but like even the big boys are down. So if you love a bargain sale when you shop, why not invest in stocks when they're on sale? Granted, investors often think they'll jump on the opportunity when stocks nosedive, but fail to do so because it's scary to throw money into a plunging market. But if you believe a company will be successful in the long run, a crash of golden opportunity to scoop up more shares on the cheap. Plus you invest in dividend-paying stocks by buying more shares, you'll naturally buy more dividends than you can reinvest in the company you believe in. So yeah, basically that is the key, another key point right there, man. If you were willing at one point, say, to pay for a premium company, let's say Apple, I was willing to pay $123 a share. Now that that's down to $115, it's like it's on sale. They reduced the price. So why wouldn't I want to pick up Apple if I know I'm going to keep purchasing Apple? And the same for me of LCA, Golden Nugget, man. I was purchasing Golden Nugget. My average price right now is around like $13 and some change. For like a total of 205 shares, I have it on Fidelity and Robinhood. So yeah, I mean the stock, I bought them in the 12s, I bought them down in the mid 12s, and now we're down in the low 12s, and I'm waiting to see if we get down into the 11s, and if the stock gets down into the 11s, I'm going to purchase some more shares and keep averaging costs down because I know these days of being down the bear market is just a matter of time for the bulls come in. And we're dodging the bulls, El Matador style, man. You know what I'm saying? We got the Matador red cape, and we're going to dodge the bulls because the bulls are coming. I know they're coming, man. It's just a matter of time. It's going to be a rough few weeks coming up, but it's definitely going to come. And number 4 of 5 here, guys. It's going to be a recovery is inevitable. It's just going to happen. Whether recovery is V-shaped or U-shaped or W-shaped is debatable. But what's pretty clear is that a recovery eventually happens. It may not happen as quickly as you want it to. All 38 stocks in the stock market have crashed, has happened since 1950, have been followed by a rebound, right? Prolonged downturns like the Great Recession, which stretched from December 2007 to June of 2009, and no etched in your memory. It is important to remember that most corrections are relatively short, about 6 months on average. So, as you can see, a lot of stocks, guys, back in March and April went down to all-time lows. And if you look right now, like say 6 months from April is like right now. So if you look at like the S&P 500, a lot of those stocks are back up to highs of before the pandemic, and some are even higher than the pandemic on the S&P 500. So that's a kind of crazy thing there. And now we got number 5, baby. Number 5 reasons why the stock market not to panic during a crash. You know it's coming, so you can prepare. Since you know that another crash is inevitable, don't be caught off guard when it happens. Focus on stockpiling at least 6 months of cash into an emergency fund. That ensures you won't have to sell investments while they're down due to a short-term cash crunch. If you're well prepared for an emergency consideration, set aside even more money to invest so you can lock in low share price. Another smart move is review your risk tolerance. While the stock market is still strong, if you opt to rebalance your allocation and be more aggressive or conservative, it's best to do so while you can still fetch top dollar on your investments. Plus, you won't have to make emotion-driven decisions when the stock market does crash. A market crash is something to be very afraid if you have a short-term mindset. But true investors focus on companies that will still own years from now, and if not forever. If you stay focused on your long-term goals, there's no reason to fear a stock market crash. Guys, I couldn't agree with these reasons anymore on this article. I want to give a big thumbs up to Motley Fool for publishing this article. And I think it was very key that we go over these today because a lot of people that watch my channel is, number one, Golden Nugget LCA investors. So I think that's probably about 80-90% of my viewers, if not even closer to that. But telling my people, man, yes, we are down right now, but it's just a matter of time. Like I said, like this here says, man, it could be 6 months, it could be a year, it could be 2 years. But the number one thing that I liked about this article, which I tell you guys in all mine, you never lose until you sell. So if you even bought in at $15 and $16 of a stock and it's down to $12, you haven't lost money yet because you haven't sold it. So it's ultimately the ball is in your court to sell when you want to sell. Now, I'm not selling until I get certain price points and gains on my shares. So until then, I'm going to keep riding it out. I'm going to keep buying in, man. That's what I want to do, keep buying in. And am I worried about right now where the stock market is? No, I'm not worried because I'm going to take advantage of these prices drop. So that's just my take on where I'm at with the stock market. I'm not going to let it bother me. Actually, I'm going to take advantage of these opportunities because that's what great investors do is, you know, I'm fairly new investor myself, but I listen to people, I read articles and listen to the people that do it, and you keep investing in when the market gives you opportunities. It's like, you know, if you were going to buy a car at $100,000 and all of a sudden they knock 10% off and now they say, hey, we'll sell that car for $90,000. It's like, hey, why wouldn't you want to take it? You know, it's same with stocks. If you're willing to pay a certain price for a stock and they knock 10% off and you wanted to buy that company, why wouldn't you want to buy it at 10% off? So just my 2 cents, guys. Hit the thumbs up if you like this video. If you got a little value out of it, really appreciate it, man. It helps out the channel. So, guys, hope you hit the thumbs up, join the Thumbs Up Nation, and I'll catch you in the next one. And remember to buy the dip.